In this video, I'm going to go over in detail the way I backtest a new strategy or pattern. I will go step by step to show you how a simple idea can become a profitable strategy. The topics I'm going to be covering are my thought process behind the strategy or the pattern I want to backtest, the three most important things I focus on, the importance of having a higher time frame to see the bigger picture when trading, the importance of using a stock scanner to look for setups and to keep consistency, how to find those A plus setups, how to create an Excel sheet, how to input data into an Excel, the reason why I use Excel, the proper way to backtest technical indicators to find out if there's an edge, how to minimize emotional mistakes, and last but not least, how to filter out the ideas irrelevant to the strategy. So the main purpose for this video is to help you create a system that fits you. As we all know, what works for one person may not work for others. I'm a true believer that we're all different. We have different work schedules, different personalities, different time zones, and well, you get the point. My point here is that by us creating a system that can cover all those different scenarios, the odds for success in trading increase. And us as traders, we're always searching for even the smallest edge in the market. So I'm going to start by explaining the three things that I focus on when I do my back testing and just overall the methodology that I used in my style of trading at least. And these are the three things that I focus on, and this is how I create my strategies and I create my back testing. Trade off of levels. So when I really understood this word here, levels, my trading really made a 360 for good. And the reason why is because if you ask any trader out there, obviously most traders we all trade different strategies, but at the end of the day, we're all focusing in one thing, a level that the market tends to respect over and over in the market. And when you understand that, then you probably 30-40% ahead of everyone else. So what do I mean by that? Levels. The market or stocks tend to respect different levels in the charts. I don't know, it could be a whole or half number, it could be support or resistance, it could be an indicator VWAP, it could be an EMA, SMA. I mean, there's a ton of things out there that the market tends to respect over and over again. So that is the first thing that I focus on when I do my back testing. I try to find a level that that the market tends to respect, right? And once I see that, then I go and do this if then thought process. We all know that it's very difficult to know what the market is going to do next. I mean, I don't know anyone that has that is capable of knowing what the market is going to do next. I mean, we do educated guesses on what we think the market is going to do. So we really don't have any control over that. But what we do have control over is what if the market does one thing, then how are you going to react? And if the market does this other thing, then how are you going to react? For example, if you enter a trade and as soon as, let's say, you go long and the market starts going your way, meaning you're in the green, what are you going to do? Like, you enter a trade, what is your thought process there? You enter a trade, um, do you know where your stop is going to be, right? Do you know where are you going to take targets? What's your thought process, right? Because once you're hit buy or sell, once you're in the trade, we tend to just our our mind goes blank, right? So we need to have a system that we know as soon as we hit that buy button, we know what we have to do, right? If the market goes my way, then I do this. Then I place my limit order to sell here. If I buy here and the market goes against me, then my stop is here and I exit. So we want to have a system that we're one step ahead of the market, and that's the only thing we could do, right? Here's a good quote from Mr. Mark Douglas. 95% of the trading errors you are likely to make will stem from your attitudes about being wrong, losing money, missing out, and leaving money on the table. The four trading fears. I like I'm pretty sure many of the traders out there um, believe that controlling those human emotions are the hardest thing to overcome, and that will be perhaps the last thing in our trading that we're going to be able to control after we learn how to trade. So this is the third thing that I focus on. As I told you guys, the if then thought process includes my entries, my stops, and my targets, right? These are, in my opinion, the most important things that you need to know before you enter a trade, right? Know how to get out before you get in. What does that mean? Know where your stops are if you're wrong, know where your targets are if you're right, and know where your entries are, and not just press buy or sell, right? So the entries, the entry point is usually a component of a predetermined trading strategy for minimizing investment risk and removing the emotion from trading decisions. Recognizing a good entry point is the first step in achieving a successful trade. And this is the fear of missing out, being wrong, missing out. A lot of times our entries, by the way, entries is the thing that I focus when I started trading. That was that was like my 90% of my back testing was focused on my entries. I did not care about my stops. I did not care about my targets. All I wanted to know is where to enter a trade. And man, was I wrong. I mean, I wasn't wrong, but I was just like maybe 33.3% right. Um, but I was missing my stops and my targets. So an entry, obviously, it's very important for you to uh, to have really good entries. Why? Because your a lot of the times your trades are gonna be based on whether you made a good entry or not, right? But that's just like I said, that's only 33% of your entire system. The next one is your stops, right? A stop order is placed when an investor or trader wants an order to be executed after a security reaches a specific price. That's the fear of losing money. A lot of the times, and all these things, I went through these things, and I'm sure most traders, at least novice traders, are going through the same thing. And when we don't know where, see, this is the only thing we're able to control. When you enter a trade and you know where to stop out, um, hopefully you have your risk management on point, and you know how much money are you willing to lose if you're wrong, right? By you not having a stop um, limit order, or maybe a mental stop, by you not doing that, when you enter a trade and the and price starts going against you even by 1 or 2 ticks, then you start um, being afraid of losing, right? And a lot of the times you stop out before your stop level gets hit, just to see the market turns around and goes um, the other direction and hits targets. And this happened to me over and over again. So um, the reason why it's very important for you to have stops is obviously to know if you're wrong, how much money are you willing to lose, and to know uh, when you know the trade that you took, it's basically incorrect, did not work out, and to have patience on letting your trade either um, stop you out or go in your favor. And target. After I started trading, after I did my back testing, when I started back testing, I focused really, 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 really hard on my entries, and I got really good at it. But then once I entered the trade, then I didn't know where to stop out. And then I started back testing my stops, right? Uh, Doing my risk management. Okay, well, if I enter here, I just want to lose $100 or $50 or whatever. So I really, really focused, and I did my back testing on my stops. So now I was really good at entering trades, and I was really good at managing my stops, right? Not losing more than what I wanted to lose. But then again, when the trade went in my favor, I would just like take profits right away. And at the end of the day, it was like, okay, I have a system that's like 70% profitable, but I'm still in the red. And it just didn't make sense until I said, well, what if I mean, why don't I just play with the numbers and really understand why is if my trading strategy is 70% profitable, how come I'm not making money? And that's where my targets or profit targets are come in handy. And so basically, predetermined point. The target is a predetermined point at which an investor will exit a trade in a profitable position. Profit targets are part of many trading strategies that technical traders use to manage risk, the greed leaving money on the table. So after I did that, I knew I had to let my winners run a little more, and in order for me to make more money, right? I mean, I'm sure you guys have heard of, risk $1 to make $1.50 or $2, but I was still just basing my targets just based on how I felt. I did not do any any back testing. So as soon as I saw if I was going short, as soon as I saw a dump, I would cover really fast, and just to see the market go, the stock go another 2 3 points in my favor. And so what I did, I by trying and error and seeing it over and over again, what I did was I went ahead and I started backtesting again and came up with a strategy where I do, for example, a 2 to 1 no matter what for my first target. So once the market hit, and based on my back testing, I've noticed that uh, my 2 to 1 tends to get hit a lot, meaning that it hits target a lot. So I did that, and then I did a second stop, a second target on a different level. So that right there, it really helped my trading. Instead of me trying to figure out, or trying to go off of just how I felt that day or that moment, I had a predetermined um, target that really took the stress off me trying to figure out where to take my profits. So before I start with this questionnaire, what we're going to be doing here is, I'm going to be showing you guys a one of the patterns, or one of the patterns that I trade. Um, Not necessarily going to show you my pattern and how to trade it. What I'm going to be doing here is explaining to you guys how I came up. I basically uh, came up with this pattern, and I'm gonna start from scratch and show you guys an example on how I came up with it, and how you are going to be able to do the same thing with the ideas that you have in mind. And so basically that's what we're going to be doing, right? And obviously we're going to be using spreadsheets, and it's going to be boring, but I'm pretty sure you guys are going to get a lot from this. So let's start with this, the backtesting questionnaire. Um, I want you guys to answer these questions before you start your backtesting, to understand what is it that you want to do with your trading and your backtesting, what kind of trader you want to become. So let's start with number one. This is very important, by the way. You got to do this before you start doing any backtesting, or before you even start doing any backtesting. That way you don't have to go back again and again and again, uh, to change things, right? So number one, what kind of trader do I want to become? Swing trader, day trader, or scalper? By the way, I already answered these questions, but once again, this is just based in my strategy, based in my time, based in the way I trade, and all these things. So you're gonna have to answer your own question. Obviously, you're gonna have different answers, right? So what kind of trader do I want to become? The swing trader, day trader, scalper? And what this will help you determine your time frame for trading. So this is very important here. Um, Obviously, I am a day trader, right? I do a little bit of scalping, meaning that one of my strategies. By the way, if you don't know what swing trader, day trader, scalper, I mean, this is really basic. Everyone should know what this is. If not, then you're gonna have to um, find out for yourself. But I'm a day trader, and you need to know what type of trader do you want to become before you do your back testing, because you will see why. Once you start doing your back testing, you just want to focus in one time frame as your trading time frame, and obviously you're going to have your higher time frame, but by you understanding and knowing what is that you want to trade, it's just going to help you. It's going to make it easier for you to not go back and forth in your back testing. It's just have to do it one time. So I am a day trader, right? That's what I am. What is my scanner setup? Must know before backtesting. This this will bring consistency on the traits you want to look for every night. So once again, you need to know your scanner setup um, before you do your back testing. And what this mean is that when you do your nightly scans, you want to be able to look for on your higher time frame. You want to be able to look for the same setup, the same pattern on the higher time frame, um, to keep consistency, right? To keep, let's say, and all this everything that I'm telling you is just based in one pattern. This is the pattern that we're going to be back testing. But obviously, as you come with different come up with different ideas, different patterns, your setups are going to be different. But for this example, you want to look for the same setup. I don't know. A um, it could be a 5%, a stock 5% during the day, from a day before. The range, I don't know, a dollar range, 2 million shares traded. And I like to do this, and I like to have the stocks that I'm going to be trading the next day. I like to have them a day before, so I could have I could do my analysis. I don't trade anything on the moment. I need to be able to have a strategy. I need to be able to have an analysis. So that's why it's very important for you to just concentrate in one setup. Overextended charts. For example, I'm going to use overextended charts for this. So that's what I want to look for. And you want to have your scanner setups before you do your back testing. Number three, what time frame do I want to trade? The 1 minute, 3 minute, 5 minute, 1 hour, the daily. This will bring consistency once again on your lower time frame setups, right? I see a lot of guys, and I get asked a lot. Okay, like I trade off the 1 minute, and there's gonna be a lot of times when this is where a lot of traders make the mistake to either overtrade or take trades that are not in their strategy. For example, I trade off the 1 minute. If there's a lot of times where there's a price, there's a certain level that I'm waiting for the price to hit, and or to close below or above, right? And in the 1 minute, it just didn't happen. So let's say I didn't get the setup that I wanted to. What many traders tend to do is flip to the next time frame, the 3 minute time frame, right? Or the 5 minute time frame. So if you do your back testing in the 1 minute, and this is one thing that I recommend you guys, that if you wherever you do your back testing on the time frame that you're going to be trading, that's it. Don't go to the 3 minute, to the 5 minute, to the hour, and trade off the 3 minute or the 5 minute. If you're gonna do your back testing on the 1 minute, that's it. If your pattern doesn't set up on the 1 minute, that means there's no setup, and then you move on, right? So I mean, that doesn't mean you could go to the hour or the day or the daily to have a bigger picture of what's going on, but don't trade off the 3 minute or the 5 minute, a pattern that you back tested and you know that works, and that you only know that works in the 1 minute. So that's why it's very important to know. Number four, am I going to trade full time or part time? At the moment, I am a part time trader. and you need to develop a system that tailored to your daily schedule, right? So why is this important? Well, for example, in my case, I am a part-time trader. So I, for the most part, I trade the open, right? And my time, I trade from 6:30 in the morning to 9:30 in the morning, and after that, um, I need to go to work. So when you do your back testing, when I did my back testing, I focus on setups that formed from 6:30, or let's say 9:30 Eastern time, from 9:30 to 11, right? Those were that was my time for my time that I back tested. Because if I let's say I do my back testing and I back test the entire day, I mean, you could do it as, just to have reference, just in case you want to go full time, and you want to have a strategy by the end of day strategy. But in my case, I knew that I couldn't trade after 11 a.m. So I only want to backtest um, setups that happened within this 2 3 hour time period, right? And that way you will know that this is the strategy that I'm trading. It's good for the open, and that's it. So number five, what are the trading hours? Once again, to assure that you backtest the hours you have available to trade. So I basically explain the reason why. You just want to trade, you want to backtest the hours that you know you're going to be in front of the computer, so that your numbers, your backtesting numbers make sense when you start live trading. Number six, what will be my higher time frame? What will my higher time frame be? I use the daily, and this will help you with your scanner development and to see the bigger picture. Once again, I already explained up here. You want to be able to know uh, want to be able to see the big picture on what is it that you're trading, and at the same time, this will help you with your scanners. Number seven, what pattern do I want to backtest? Um, so I named this setup the strength setup, and I tend to put names on the setups or patterns that I trade just to get familiarized with the setups. I mean, that's just my that's just the way I do it. And I'll suggest you guys to stick to one pattern at the time when backtesting. So you will see that, and this happened to me. You'll see that as you start doing your backtesting, you're gonna start noticing other things. And we go back to what I mentioned, levels, right? Once you start doing your backtesting, you will start noticing other levels that the market respects. And a lot of the times you kind of deviate, traders, or at least I did. You tend to deviate from what you're doing, from the setup, the strategy that you're backtesting, and then you're gonna end up all over the place. So what I suggest you do, maybe put it on the side, have your notes if you notice something that you want to go back and backtest after, but just try to stick to one. Number eight, what indicators do I want in my charts? The 9 EMA, that's what I'm going to have. The 9 EMA, the VWAP, trend line, Fibonacci. You want to get familiarized with these indicators and backtest to make sure there's an edge using them. So, I really don't use um, many indicators. Um, I It took me a long time to understand that. I used to be one of those traders that you honestly you couldn't even see my chart. I had so many indicators on my chart that it was very difficult to uh, to see the candles, the price action, right? And I'm gonna show you guys. I want to show you guys how to eliminate all those indicator if you have any in your chart. And the only time you will see an indicator in my chart is if I back tested that indicator and I know that it works. Otherwise, it's just taking real estate um, from my chart, and I don't want that. I want to be able to have a clear view of what's going on. So I'm going to show you guys how to back test as well, how to back test an indicator that you have in mind, and see if it's even if it makes sense to have it in the charts. Number 9, do I want to trade to the long side, short side, or both? Um, Choose what you are comfortable trading and stick to it. So I know there's a lot of traders out there that are short bias, long bias. For this particular setup, I trade both ways, long and short. But for this particular setup, I'm only trading to the long side. Number 10, what type of stocks do I want to trade? Penny stocks, mid caps, large caps. That's what I'm gonna be. That's the only thing that I trade: mid caps, large caps, and in my experience, $10 or less tend to behave different from the $10 or more um, stocks, right? So honestly, my strategies they worked. They work on all time frames or all time or stocks, even on penny stocks. But what I'll suggest you guys doing is just stick to because I know they do tend to move different. So what I suggest you guys doing is just trade back test. If you want to back test, just back test $10 and up and higher. And if you want to do back testing on the penny stocks, then you do it separate. Just I think that's a good idea. Number 11, what will be the prices of the stock I want to trade? Again, only backtest one strategy at a time. So I already went over that. So this is a picture of a setup that we're going to be backtesting, and that the basically what we're going to be looking for. And as you guys can see, um, I have my type of entries, my stops, and my targets. So it's the 1 minute, and so what I do first, the first thing that I do is I already have an idea of a level that the market tends to respect, and that is on trend lines, right? That's a trend line is going to be my level. So what I want to do, what I want to do is I want to go over just look at I don't know 50, 100 charts, right? And try to see um, if the level tends to be respected a lot, right? So in my case, I already did that. I went over a bunch of stocks, and I've noticed that the this level was being respected a lot. So my the second thing that I wanted to do is okay, based on what I saw, I want to have different types of entries. And so at this point, it's whatever comes to your mind, right? Whatever comes to your mind, you could have, two, three, four, five different, six different ways of entering um, the trade, right? And same goes for your stops. You could have, in my case, I have four different things, but you could have four, five, six different things, and and same for targets, right? I have three ways to take profits, and you backtest these three things uh, with many options, and then you, based on your numbers, then you'll see which one works the best, right? For example, the type of entries. Obviously, the easiest way, the easiest one is just a limit order, right? Every time the market comes. By the way, I'm gonna explain to you guys what I'm looking for in the next video. Right now, I'm just trying to explain to you just the methodology behind what I do. So the first the on my entries, the easiest one is obviously a limit order, right? Just whenever you see something, whenever you see a setup, just limit that thing, right? And then number two, first green candle to reclaim trend line. So basically what it is if you see this purple trend line here, what the limit order means is, okay, as soon as the market dumps, I just have a limit order on the trend line, and then you backtest that. How many times, if you do that, how many times are you going to lose, right? The second one is first green candle to reclaim the trend line, meaning that as soon as it dumps, it goes under and over. Once it reclaims the trend line, is that a good idea to do? And then number three, first green candle to reclaim trend line and 9 EMA. EMA needs to be above trend line. So basically, this you want the market to go down, right, and kind of the reclaim the trend line with that 9 EMA above. So those are the three types of entries that I want to backtest, right? And this I came up with by looking and just going over charts over and over, different charts, and just whatever came to my mind, and thought that might work. I put it here. And then for my stops, at the lowest low, right? So you go as soon as now let's just say you limit order a buy here as soon as it hits this trend line, right? And your stop will be at the lowest low, meaning here, right? As soon as it comes, it hits, and it bounces up, your stop will be here. So this you would have been stopped down. And then number two, at the break of the 9 EMA, right? So if it goes down, if it goes down, you limit order. It goes up, and as soon as it breaks the 9 EMA, you're out, right? And number three, at the break of the trend line, meaning that if it goes up, if it goes down, you enter, it reclaim trend line. As soon as it breaks it, you're out. And then at the most recent higher low, right? So it goes down, goes up. As soon as it makes a higher low, your stop will be right below, right? For example, here, if it breaks this bottom candle, then you're out. So those are the four criterias or examples that I want to backtest for my stops. And then for targets at the 50% Fibonacci level, obviously I don't have it here, but usually draw from the previous swing, the 50%, and then I'll take it once it hits, which is almost around here. At the break of the channel, so I could draw a channel here, or a trend line, whatever you want to call it. As soon as it breaks, then I'm out to the next support level. So if we're buying, the next support is here. As soon as it hits it, how many times does the market tend to go up and retest support, right? So those are the three um, um, different ways for me to take profits. And as I mentioned to you guys, the daily chart is very important. So the 1 minute, I showed you guys the 1 minute. Now the daily, this is the pattern that I want to see on in my scanners, right? And I want to see the same thing over and over again, and that is a parabolic daily chart, right? With volume over 2 million, and unusual range in the past day. So um, this particular setup popped up in my scanner because it had you know it had a big run the day before. It went from 64 30s to 67 50s almost. So based on my criteria of what is it that I want to see in in the stock, it popped up. So this is how I want to see the what I want to see on every stock, um, part of it, right? The part of my criteria is that I want to see see daily charts like this. So back testing using Excel. Why Excel? Why Excel? Excel is a great tool to gather data from backtesting without having to memorize it. Once enough data is collected, there are ways to filter out what doesn't work and or add to the strategy. Excel will also help keep track of all data from the past trades as you advance in your trading journey and come up with new potential ways to improve the strategy. Having the Excel sheet will make it more efficient. So, um, a lot of times I know a lot of traders who don't keep track of anything, right? They just I guess they have a really good memory, but in my case, I don't. I need to see numbers. I need to be able to see, visualize, and see for my for myself that whatever I'm trading in the long run is gonna make me money. So I mean you could write the stocks on a piece of paper and all that, but with Excel it just makes it easier. Once as you go with if you as you learn more things from your trading, you're gonna want to you come up with different ideas. You're gonna want to go back in time in your back testing and maybe back test on new ideas that you get. And by you having all the data saved up in an Excel, it just makes it that much easier because you're gonna have access and you don't have to go back to every stock and redo everything over again. Excel will also help you find those so-called A plus, B plus, C plus setups, which will help you be more selective on the trades taken. So I'm sure you guys heard of traders out there that say, "Oh, well, I only focus on my A plus setup," or and if you're like me, you question like, well, how do you know? Well, what setups are those, right? Because when you don't know, everything is you think it's A plus, but in reality there isn't. I mean, there's gonna be setups that are going to be that are gonna have a higher win percentage, and I will show you how to find out which ones are those by using Excel. At the end of the day, at the end of the day, we are trading based on statistics and numbers to find an edge. So, like I said, I'm a numbers guy, so I like to use Excel for that. So now I'm gonna show you guys how to build an Excel sheet. All right, so this is the spreadsheet. So I'm gonna go over real quick, um, explaining you guys how, um, just kind of going step by step on the things that I look for, the information that I try to um, that I try to keep in my spreadsheets, and the reason why. In the next video, I'm gonna go over more in detail. Actually, we're gonna start doing the back testing, but for now, I'm gonna just show you guys the spreadsheet. I'm no expert by any means. I mean, I'm sure there's lots of you out there that have a better spreadsheet, but this works for me. So as long as it works, right? So the first thing that I want to that I want to focus on is the entry information, the from the stock, the date, the name of the stock, the price, P or D is a parabolic or dump. If it's a gapper, uh, the entry time when I take the trade, the exit time, and why is this important? Um, Once again, just in case, this is just in case you guys want to go back and do some your back test, right? Once you start learning more and come up with different ideas, then it's going to be easier for you to go back and find a stock, um, the exact time that you took the trade, and the exit, and the price, and all of that, the date. So that makes it easier. And then the type of entry, right? The patterns. The pattern that we're going to be trading is the strength trade, and the type of entries I already went over with you guys, right? It's limit order, first green candle, and so on and so forth. What I try to do, I try to number each one of them. That way, if I'm going to if I backtest, for example, the limit order, I'm gonna put a number one here, and as reference, I know that one means limit order. But this might sound confusing, but when we start doing the backtesting, you guys will see that it's gonna make sense. Um, L or S, long or short. For this particular setup, we're most likely mainly gonna go long, but there are other setups that you could go long and short, and so for you to keep reference on that, you could put an L or S. And then after that, it's the filters, and this is what's really going to change what's really going to make your strategy very powerful. And what filters mean is very simple. We want to this is where we add the indicators that we want to use, and we also want to add other levels that the market tends to respect to make a stronger confluence on the trade that you want to take, right? So I'm gonna give you an example. Obviously, you guys don't know the setup that I'm trading, but just to show you guys what it is, what is it that we're doing. So previous day's close, market tends to respect that a lot. You know, where the market closed from the day before. Uh, that's a that's a level that it's very respectable. So I want to see if whenever I get a trade that's just happens to be at the same place where the previous day's close is. How strong is it? I want did it retrace to the 50% before the pattern setup? So this is I want to see if um, if I have a dump and then it retraces and it makes a 50% correction, does that mean that the setup is already done? Um, so that's what that means. Whole or half number, like I mentioned, the market tends to respect whole and half numbers. So I want to know if it makes any difference to just take trades that have a whole or half number close to my setup. Um, Support and resistance 1 minute. Where I'm gonna take a long. If I look left, does it make any difference if I have support that's going to help you push it up, or it's relevant? Support and resistance daily, same thing, right? Double bottom, higher low form over the trend line, meaning if my pattern sets up above the trend line, because remember the trend line is my level. Uh, uh, Double bottom, same thing. Um, Above 90 EMA. So this is where these are gonna be my three uh, indicators that I want to use. So I want to see if it makes sense to take the trades at once it reclaims the 90 EMA below VWAP. I want to see if my setups happen to set up under the VWAP. Does it make any difference, or should I just take setups are above the VWAP? Below 50 SMA, same thing. If I'm taking it long and it's below the 50 SMA, does it make any difference to maybe wait until it reclaims the 50 SMA, or it doesn't matter? So those are the things that I've noticed as I was going over the charts that I saw. So this also it's also going to help us find out those so-called a quality setups, right? So let's just say, just for an example, that um, if I get this one of this, I'm gonna put a one, and then if I don't, then I just put a zero. So let's say I get a setup, right? I get a setup, and then and the previous day's close. The previous day's close wasn't near my entry, so I'm gonna put a zero. And then did it retrace to the 50% before the pattern? Let's say it didn't. It didn't retrace, so I'm gonna put a one. And let's say that there was a half number of 40-50 right where my pattern set up, so we put a 1 there. And then support and resistance 1 minute. So let's say that support, there was no support on where I took the trade on the 1 minute, so let's put a 0. But if we saw that there is some major support on the daily, right? So we put a 1. And double bottom, there was a double bottom there, right? So we put a 1 there. And this is the same thing, 0. And then above 9 EMA. So this thing, it's set up, and my setup was right above the 9 EMA, so we put a 1 there. And then below VWAP, it was below VWAP, so that doesn't mean anything. So, and then below SMA, it was below SMA, so put a 0. So at the end, obviously I don't have it yet, but at the end, what this is going to do is going to add all the points, right? It's gonna add the points here, and the trades that have the most points, let's say, I don't know, 6-7 points, you'd be surprised. Those are the the A, the A plus setups that you want to trade. So what that means is that maybe when you get it set up, you look for all these things. You want to make sure that there's a whole or half number near that the entry. There's no 50% correction, and so on and so forth. And so that's how you find your A plus setups. When you do your back testing, that's how you label them. Um, Obviously, I don't have this usually. Something wrong with the spreadsheet, but usually you'll see the you it'll add all these numbers. So I promise by next video it should be there. So let's go with the stops now. Um, the stops I already went over the stops as well. So you want, as you remember, the lowest low, the break of the 90 MA at the break of trend line, at the most recent higher low. So basically you're gonna put a, let's say, the lowest low, it was a win. If you break the 90 MA, it was a loss, win, right? So you know that at the end, when you have the most wins, then then you have an idea of most likely this will be your stops, right? Let's say this two, and then we go more into detail on how to do a even in-depth back testing. But that's basically your stops, and then your exits. You remember at the break of the 50 SMA, the next high, and the channel. So then you put win, lose, win, lose, and lose, and then you have your notes here. So that's basically a fast rundown of the spreadsheet. In the next video, we're going to go in the chart. I'm going to explain to you guys what I look for on that the setup. I'm going to explain to we're going to go over lots of charts, and we're going to look for those setups. We're going to start inputting data into the spreadsheets, and I'm going to show you guys how to do all that and to see if the trade that we're looking, it's profitable or not. All right, guys, so I'll see you guys in the next video.